Tesla and Amazon are two of the most popular stocks in the market today. So what I thought I'd do in this video is compare the two and determine which stock is the better buy, Tesla or Amazon. I'm going to look at a few critical metrics, so let's get right into it. Starting with the price change in 2022, Tesla stock was down 65% while Amazon stock was down 49.62%. Next, let's look at these two in terms of revenue and revenue growth. Looking at just the revenue, Amazon takes the clear lead here with 127 billion in revenue in its most recent quarter. This was up from a little less than 80 billion just before July of 2020 quarter. Of course, the pandemic was really good for both of these companies and revenue exploded. Tesla's revenue of 21.45 billion was much higher than it was before July of 2020. However, if we looked at revenue growth, Tesla is doing way better than Amazon in this regard. Tesla's revenue growth has been above 40% for several consecutive quarters now, where Amazon just briefly touched up over 40% during the earlier stages of the pandemic, but has recently slowed down considerably, falling to 14.7%, while Tesla's revenue growth reached 55.95%. And in the near term, I feel that Tesla's revenue growth is going to remain higher than Amazon's. Longer term, that remains to be seen. However, in the near term, Tesla has a stronger tailwind at its back. Now let's consider the two based on operating profit margin. And what we see here, Tesla in the purple, Amazon in the orange, they were really close. Amazon was ahead of Tesla earlier in 2020. And then, like I mentioned, the pandemic was really good for Tesla. A lot of consumers wanted to get an EV and they were fueled by stimulus checks, so they had more money to spend. Car prices increased, and so they were willing to pay the premium prices for Tesla models because other car prices were also expensive, right? You were going to a dealership and they were trying to charge you $10,000 above MSRP. Well, if you're going to pay a high price for a regular car, now it makes a Tesla's electric vehicle a lot more relatively better value, right? So Tesla benefited in that regard and its margins improved. It increased to an industry leading 16.7% trailing 12-month operating profit margin. Meanwhile, Amazon's profit margin has been declining as it overinvested during the pandemic, and now it has all these extra warehouses, extra planes, and extra fulfillment capacity that's not being used up completely because consumers are spending more money on away from home experiences now. So they're differing, and Amazon's profit margins were never high, and they're never expected to get really high because it operates in a really thin profit margin business, selling low cost items and delivering it to your home for fast and free shipping. Whereas Tesla at least has the potential to be profitable in the longer run as it reaches greater economies in scale, and then the gross profit margin on each vehicle improves, as Tesla has proven that it can do. In the long run, it has went from a gross profit margin close to 16% all the way up to 25%. So in terms of profitability, Tesla has proven better economies in scale, and so Tesla gets the advantage here. Looking at cash flow from operations, again, Tesla is showing nice growth in terms of cash flow from operations, going from negative cash flow to positive 5 billion in cash flow in its most recent quarter. Meanwhile, Amazon is going in the opposite direction. If we look from January peak, it's going downward, and I expect this to continue either at remaining flat or going downward unless Amazon emphasizes a really strong cost cutting campaign. It's got over 1.5 million employees. I really think that if it was to reduce that headcount by 10%, it would really be healthy for the company to bring its costs down in line more with customer demand. But for now, Tesla advantage in cash flow from operations trend line, right? Of course, Amazon is more than double Tesla, but in terms of the trend, Tesla is doing better growth wise where Amazon is going downward. Finally, I like to look at inventories here because this has been a problem for a lot of companies. When consumer demand was really strong during the earlier stages of the pandemic, they built up inventories, and now consumers are spending more on restaurants, bars, travel, experiences rather than things. And this is where companies like Amazon and Tesla are getting in trouble. Look at the surge in inventory for Tesla from less than 5 billion to more than 10 billion. Look at how exponentially it increased. uh, Amazon also from around 20 billion in inventories to 36 billion, but the growth it was higher for Tesla. This is a concern, but it's a concern for both companies, not just one or the other. Finally, let's look at their valuation, and I chose to use the price to earnings forward, what's going to happen over the next few quarters, and then determining the price you're paying now for the prospects over the next few quarters. And Amazon trading at a forward PE of 59.9, meanwhile Tesla at 32.31. So, to answer the question, which of these two stocks is a better buy? I'm going to say it's really close. It's really close between these two, but I'm going to say I'm sorry, Tesla is the better stock to buy here between these two. I think Amazon's prospects profitability wise over the next few quarters is really troubled, and I haven't seen, Amazon did announce job cuts of 18,000. I just don't think that's enough. I think they're going to need to do like 4 or 5 times that in terms of their warehouse and fulfillment staff. So until I see more stronger cost cuts from Amazon, Tesla has the advantage in terms between these two. All right. I understand they're very different companies. It's hard to compare these two, but if I was just looking at it based on what we had here, I would say Tesla is the better stock to buy. All right, thanks for watching. I'll see you next time. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.